Well guys, the day is finally just about here. It's sort of bittersweet, but as of right now, I currently have over 2,250 shares of SCHD, 2,258 to be exact, across all my long-term portfolios, which at least pre-split means that I did surpass my goal in 2024 to reach over 750 shares at a minimum. Now, if you guys have been watching me for a while, I've been buying SCHD shares every single day, basically that the market's been open for several years now, buying sometimes a share or two here and there, and then of course on days where SCHD is in the red, buying many more shares than that. Now, across all my portfolios, I own SCHD at an average cost of around $25 more or less per share, which means I have somewhere up around a 4% plus yield on cost, and with the next dividend coming out very soon, hopefully that moves up substantially. But the reason I'm making today's video is that because 2024 is almost to an end, and because my SCHD position is basically maxed out at this point, just like I promised, I am going to be diverting my cash balance on a daily basis into a brand new ETF that I'm going to build out a substantial position next. Now, this is not because I don't like SCHD, but it's just because I want to sort of balance out the portfolio, and I want to own different ETFs that even if there's some crossover, I want some more exposure to some growth, maybe more income, etc. So in this video, we're going to go through 3 of the ETFs I'm thinking about buying into on a daily basis throughout all of 2025. We're going to look through each of the ETFs, share with you what they each have to offer, and then maybe towards the end of the video, you guys can actually help me choose which one that you think would be best for my personal long-term objective and strategy. So if you're interested in seeing the next ETF that I'm going to be buying into every single day moving forward, make sure to stick around, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, before we go into the first of 3 ETFs that I'm planning on buying into in all of 2025, building a brand new large position, I wanted to first just backtrack and share with you guys what I love about SCHD and why I decided to spend so many years and so many dollars buying this ETF consistently. Now, for me as a 32-year-old investor that wants to retire off my dividends maybe in the next 1, 3, 5, 7 years, again, who really knows exactly when I'm going to be wanting to do that, but sometime in the near-ish future. I want to build out a long-term portfolio that offers income and growth potential, but income is very important, and when it comes to SCHD, this ETF offers somewhere around a 3.5 to 4% starting yield, depending on when you bought into it, but along with that, because this ETF's objective and historical performance, the dividends have been getting larger and larger over time, which is going to be very helpful, especially for someone like me that wants to use these dividends to pay for things like bills. Now, because that, along with many other reasons that I've touched in the past, this ETF was almost a perfect foundational position that I started building, like I said, several years ago. Now, the first of 3 ETFs that I have in mind to divert that daily cash balance into and build out a brand new substantial long-term position is ticker symbol FDVV, the Fidelity High Dividend ETF. It's an ETF that we've talked about before on my channel here and there, but an ETF that's not necessarily as popular to that as SCHD. And honestly, I'm not exactly sure why, because this ETF is very high quality. Now, it says right here, the objective of FDVV is to provide investment results that correspond before fees and expenses generally to the performance of the Fidelity High Dividend Index. Normally, this ETF invests at least 80% of assets in securities included in the Fidelity High Dividend Index and in depository receipts representing securities included in the index, and may lend securities to earn income for the fund. Now, the index description, it says the Fidelity High Dividend Index is designed to reflect the performance of stocks of large and mid-capitalization dividend-paying companies that are expected to continue to pay and grow their dividends. So just like SCHD, this ETF has a basket of holdings that at least historically have paid dividends and also going to raise their dividends over time. But also what I like about this ETF and why I sort of want some exposure into it and why it's one of the contenders is because this ETF offers a little bit more upside in my opinion. Now, the 30-day yield as of right now for FDVV is around 2.87%. So by moving my funds daily, more or less, from SCHD into FDVV, I'm not necessarily going to take a massive hit as far as forward income goes, which is sort of important. Although, again, because I'm trying to build out a different position, I'm okay with having it be a little bit lower yield and having some more upside potentially. Now, one of the main reasons I have FDVV as one of my top 3 contenders is this right here. The top holdings of this ETF are things like Apple, Nvidia, Microsoft. Then we have more familiar names like Procter & Gamble, Broadcom, ExxonMobil, Philip Morris, NextEra Energy, General Aerospace, Targa Resources Corp. But obviously the main focus is the top 3 holdings, which make up well over 15% of the entire ETF. Names like Apple, Microsoft, and Nvidia are probably going to keep performing well in the future. At least that's what I think. Who really knows? And although I do have massive exposure to Apple, I have 1,001 shares of Apple right now, I still wouldn't mind more exposure because I personally think Apple is going to continue to grow over time. Now, the top holdings are probably one of the only things I don't like about SCHD, but what I mean by that is that there's some of the top holdings within the ETF that I'm not a huge fan of. So with FDVV offering exposure to names like these that offer dividends but also massive growth, this is what makes this ETF a massive contender. Now, looking into FDVV's performance on the 1 year, it's up over 30%, which is massive. Year to date, it's up 24+%. Now, again, because of the top holdings, this ETF does have the potential to grow a lot faster than that compared to SCHD, in my opinion. But again, because I'm an investor that wants income and growth, it's going to be hard to decide whether or not I'm going to focus more on growth or income. Now, number 2, the next contender, the next ETF I'm considering building out a massive position in over the next year or so is VIG, or the Vanguard Dividend Appreciation ETF, another ETF that I do own a few shares of, but haven't really went all in on yet. Now, this ETF summary says, seeks to track the performance of S&P US growers, index, passively managed floor application approach, remains fully invested, and emphasizes on stocks with a record of growing their dividends year over year. So also, just like SCHD, VIG has a history of growing and also investing into stocks that have grown their dividends over time, paying us investors more and more as far as distributions go ongoingly. Now, the performance on VIG has been outstanding, and the fact that this ETF offers exposure to over 300 different stocks gives me a lot more diversification than that of SCHD and FDVV, which have just over 100. Now, the top names in VIG are also very familiar and high quality names. A nice mix of growers, nice mix of income payers, names like Apple, we have Broadcom, of course, Microsoft, JP Morgan, names that I already have a decent amount of exposure to, but again, a very well diversified basket of holdings, which no one stock makes up over 5% of. So VIG, in my opinion, is a very good sleep well night ETF, which again is exactly what I'm looking for as I scale up my portfolio into a brand new position. Now, one thing I will say is that VIG's starting yield is around 1.7% or so, which is about half that of SCHD, so I am going to be taking a decent sized cut as far as income goes by buying into something like VIG every single day moving forward, which is something to consider, although VIG, at least historically, has grown like crazy, which is going to potentially help my net worth grow up a lot faster than that instead of buying into more income-focused investments. And because I already am pretty exposed to a lot of income-focused investments, make it stocks or ETFs, VIG could sort of round out the portfolio and give me some more growth focus in a portfolio that's made up of a lot of income-focused investments throughout. Now, last but not least, the other ETF that I'm considering buying more consistently every single day moving forward in 2025 is an ETF that I've already owned for a while now, but again, focusing on it would be completely different. I'm talking about DIVO, or the Amplify CWP Enhanced Dividend Income ETF. And this ETF, like a lot of you guys know, has been in my portfolio for several years now. I own well over 1,000 shares, and DIVO pays me a substantial amount of income every single month. Now, why DIVO, you might ask? DIVO is comprised of high-quality dividend-oriented stocks, and along with covered calls and individual stocks, DIVO's active management allows the portfolio manager to identify risks and opportunities in real time, and allows investors to almost see a 5% starting yield or distribution rate right off the bat. Now, what I like about DIVO, it's decently diversified with 26 different holdings as of right now, and along with that covered call overlay, you are going to have somewhat of a buffer to downside and volatility. And even though DIVO offers around 5% starting yield, which would give me a lot more forward income, basically right off the bat by buying into something like this every single day, DIVO probably isn't going to offer as much upside potential because of that covered call overlay. But the reality is that even over the last year timeframe, DIVO is up 21+%, all while paying around 5% yield to investors, which is pretty massive. On the max timeframe since 2016, DIVO is up around 71+%, and that's not even including distributions. So this ETF has not only paid me personally since I've owned it substantially every single month, but also I'm up a lot on my shares. Now, if I were to choose to buy into DIVO as a consistent ETF play, it would obviously offer my portfolio a lot more income ASAP, but again, I might have some captured upside because of the cover call overlay and because of how this ETF is constructed. And that's why it's going to be hard to decide whether or not I want something like VIG, FDVV, or DIVO, and it's really going to have to depend on if I'm going to favor growth and or income moving forward. So now that we talked about 3 of the ETFs that I'm honestly seriously considering to make my new daily purchase throughout 2025 and beyond, I lastly, most importantly, want to hear from you guys down below. If you were me, knowing my investment strategy and my objectives, would you personally, moving forward, buy into something like FDVV, like VIG or DIVO? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.